Well, let's take a look now at the markets over in Kenya. Recapping on trade as it played out in yesterday's session, we had the main share index falling 0.9% to just under 4,976 points. And that after an initial jump in prices after the court upheld Kenyatta's victory. Market watchers saying that investors have been tempted to take profits after most stocks broke their 4-year high levels. So consensus seeming to be that despite the pullback yesterday, the market is still awash with optimism. So analysts see further gains in the near-term horizon. We had Barclays Bank specifically, and that along with Cooperative Bank leading yesterday's decline, with both of those banks shedding 3.7%. On the currency front, the Kenyan shilling is expected to add to recent gains as investors unwind dollar hedge positions taken before the elections, while importers are holding back on orders in the hope of a stronger shilling. We've got the unit coming into this morning pretty flat at 84.80 to the greenback. Remember, the shilling has risen 1.3% against the dollar this year, mainly due to the peaceful elections, which were in contrast to the previous election back in 2007. Where the disputed outcome led to violence. Technical charts showing the shilling's next resistance level at 84.50 to the dollar, and a break below that could see it gaining further. So that a broad overview of what's been playing out in the Kenyan markets. Let's get into some analysis now of those markets with Moses Waireri. He's head of research at Sterling Capital. Moses, thanks so much for joining us this morning. Let's get straight into what you're making of the activity. A slight pullback coming to the fore in yesterday's session, but analysts for the most part saying nothing to be too concerned about. A breather had been anticipated.
Thank you very much, Alishia. Yes, the market has been on a very, very strong rally in the past week, especially after the results of the petition and the aftermath of the result of the petition, which was peace prevailing all over the country. So we've seen a lot of increased confidence in the market. A lot of money is being pumped into the market. That's why we're seeing the NSE, that's why we saw it rallying over the past couple of days. But yesterday and the day before, we saw a pullback in the market, which was expected due to the overvaluation of majority of the counters. For example, if you look at Cooperative Bank, it was trading at 18 shillings. If you look at Safaricom, it's trading at 6 shillings 35 cents, which is at a PE of about 20 times if you compare that to the sector PE of about 15 times. So majority of these counters are overvalued, and we are seeing investors actually booking their profits and staying liquid, so that when the market bottoms out, that's when they re-enter.
Yeah, let's take a look at Safaricom specifically there, Moses. I mean, it was the top moving trading shares worth 70.9 million Kenyan shillings yesterday. We had the counter climbing 2.4%, and that on the speculation of improved earnings moving forward. Where your forecast sitting with regards to Safaricom and its earnings potential as we progress?
With Safaricom, we do expect an increase in earnings. We actually have done an analysis of that counter. We expect the earnings to grow from last year's 0.32 to about 0.46. This would be driven by the M-Shwari, the new product in M-Shwari, which has generated about 4 billion in deposits in the past, I think, 4 months now. The increase in taxes on M-Pesa hasn't stifled the use of that product. That product is the demand for that product, the utilization of that product is really strong. That's why, and M-Pesa is the bread and butter of Safaricom. We believe that product to be an elastic, and we believe that it will deliver strong results going forward.
What is interesting is that that expectation as far as earnings are concerned extend across sectors. We've had Standard Group's share price rising as well, and that with speculation rife of better earnings of their full year numbers as well. Take us through your view on Standard Group right now. Of course, this group exposed to the media scene specifically.
With the recent good results from National Media Group, the largest media group in the region, we do investors actually expect that to be positively reflected in Standard Group as well, because those two are competitors and they are the biggest in the market. Standard Group and National Media don't have a lot of, you look at their core businesses and their divisions, they are very, very similar. So our strong results in National Media Group, investors actually expect a very strong performance in Standard Group. And that's why we're seeing the share trading at the current prices that it's trading.
Okay, we've got Kenya Airways making stride with regards to its strategy moving forward. It's adding one more flight to the Kisumu route, and it's increased, of course, the frequency of flights as well. What are you making of its new strategy, and is there a more positive light that's being shone on Kenya Airways given the kind of turbulent past it's been through?
I think the hangover effect of the loss they reported for their half-year results is still affecting the counter. We're still seeing a lot of distribution pressure on that counter. So this positivity, the positive news coming into the market, sweeping through the market, has still not been reflected in the share price. So Kenya Airways still needs to do a lot more work to show investors that it does have value, that the counter does have value going forward.
In Africa, we had the number of KQ passengers growing 10% to 516,000. So that's certainly encouraging because it's highlighting that the demand is out there. It's now up to the company to leverage off that kind of demand moving forward. Let's quickly take a look at some of the agricultural players and whether or not you've got an eye on that space. We've heard or had headlines come through this morning where good weather has pushed tea output specifically up by 60%. We know that the counters that operate within that agricultural space are very tight on liquidity. But if you can get your hand on an agricultural stock, would you at this stage?
Yes, I would. I still believe there's value in some of these counters. The main risk for the agricultural counter is basically the agricultural sector in Kenya is very weather dependent. That's the main risk. But thank God we've been blessed with very good weather over the past few months, and we do expect positive returns for these counters, as well as they are exporting companies, and most of the commodities that they deal with have very high international prices. So that will be positively affect their books going forward.
Moses, wrapping this week up, and as we head into next week, take us through some of what you've got your eye on coming in the upcoming week.
A counter which I have my eye on is actually Seckam. Although it's trading at a high of at levels of 19 shillings, I still believe there's value in that counter. And considering that the year end is 31st March, and considering they bought out a stake in Platinum Credit Company, they bought a stake in Carl Bank. It's a bank in Ghana which has huge potential going forward. We believe that these investments will positively impact their income statement going forward. I still believe there's value in Seckam stock.